Welcome to Fundamentals by PMG. In a market full of noise, we are looking past the headlines and getting back to the fundamentals of unlisted commercial property investment. Join the PMG team as they explore the strategies, sectors, and the stories behind building long-term tangible wealth through commercial property. Let's get into the episode. I'm Tina Burns, Head of Marketing and Communications at PMG. Today I'm joined by two of my esteemed colleagues who collectively know more about commercial property, funds investment than almost anyone that I can think of. With me today, Scott McKenzie is our Chief Executive of PMG, and Rory Diver heads up our Investor Relationships team. But we'll get into some of the details shortly. But first and foremost, I'd like to give Scott a couple of seconds to just introduce yourself.
Sure, thanks Tina. Nice to be here this morning. So I'm originally from a farming background in Otago in the South Island, and studied in Christchurch, got a finance investment background, and immigrated north into banking finance, spent some time in the UK in investment and finance and property over there, established a property fund or vehicle over there whilst I was there, private vehicle, and then made my way back and now immigrated to Tauranga, where I'm based today, and I've been involved in the business now for 14 years. Loved every minute of it.
Fantastic. And Rory, to you.
Yeah, not a farming background for me, but I grew up in regional Hawke's Bay and Waikato University, where I did a commerce degree. So my background was originally in accounting, spent some time commercial banking as well, and then a bit of time offshore where I first kind of got exposed to commercial real estate funds, and I've been with PMG 7 years now. So yeah, really enjoy the role of kind of leading the investor relationships team.
No, fantastic. Well, the reason why we're here today is to start a conversation to the listeners around commercial property funds, but in particular the unlisted sector. Been so many conversations over the last few years, and I thought, what a fantastic opportunity to demystify, digest, and talk about some of the key things around commercial property funds. Let's crack into it.
Fantastic.
Sounds good.
So let's start with the basics. Throw to you, maybe Scott. When someone hears unlisted property fund, what do they usually assume, and how far off is that assumption?
Great question, Tina. So unlisted property fund, quite simply, it's probably easier just to explain what it looks like and then what people think about it. Is quite simply an investment in commercial real estate, or a portion of commercial real estate. So our history, our background is originally syndication, where we buy a property and a number of investors will invest in that property. So they'll get an interest or a portion of that property and receive the benefits of the returns and the growth in the value over long term around that as well. Unlisted funds is quite simply not traded on a platform such as the NZX, and so the underlying investment in the property is not traded publicly, as it were. It's more privately held. So when people think about unlisted funds, really most people move to it's an investment in commercial real estate of a group of pooled assets or commercial properties that might be not just in one area or one building, but multiple properties across different sectors and parts of the country.
Fantastic, thank you. And Rory, just while your role is to, you're at the coalface dealing with having client conversations with investors on a daily basis. What are some of the things that keep coming up, just in terms of articulating, what we do and in this unlisted space?
Yeah, I mean, just to touch on the unlisted aspect of that, I think there often is a little bit of confusion around it from investors to what it really means. And I always think about it from just real estate as an actual asset class. It's physical, you can touch it, you can feel it. And so when a lot of people think about, I guess, owning a home or a rental property, it's very similar to that. And so it's very easy to explain. I mean, if you drive past a building that you have a share of an ownership in, to Scott's point, you have a share of that rental income and the potential for capital growth as well, just as if you own that asset yourself. So it's very much, I guess, geared towards people who want to get access but couldn't go it alone, really.
Yeah, and we keep hearing this term, unlisteds compared to REITs. Can you just give us a sense of what that means?
So a REITs is effectively a real estate investment trust, is the language they use in Australia, particularly over here, listed property vehicles. A property company that's listed on the stock market. So unlisteds, as we mentioned earlier, aren't listed on the stock market, so not daily traded. The difference principally is typically the funds are slightly larger in the listed vehicles, but you do tend to, they say, and there's a term we use, the price you pay for liquidity is volatility. So in the listed share markets, property companies included, tend to, the price will move according to the sentiment of the market. Whereas in the unlisted property space, the place that we involved and invest in, the price typically and the performance of the funds is directly correlated with the underlying performance of the properties themselves and the tenants that are operating them as well. So you don't have the same degree of volatility that you see in the share market or listed property vehicles or REITs, as you talked about.
Sure. Thanks. And Rory, just a question, I guess, when you're talking to investors, how would you typically explain that, and what are the, I guess, trade-offs of being in an unlisted fund?
Yeah, I mean, in an unlisted fund, obviously, because you are directly invested in the properties themselves, you have to understand that if you want to sell or exit, it's not as easy as pressing, sell on an exchange. So, I mean, I think about it, if you owned a rental property or a commercial building, if you want to sell that asset, you're not going to be able to sell it this afternoon. There's going to be a process you have to work through, and it's the same in an unlisted fund as well. So we would put a sale agreement in place, and then you go into our secondary market queue where we match buyers and sellers.
Can you just explain simply how the secondary market works?
Yep, so it is just a matching service between a willing seller and a buyer, and so we do that on a priority basis where someone will sign a sale agreement. On the date they sign, that's their position in the queue, and then our team go out to find those buyers for them. We match them off, and so it gives investors a pathway to exiting their investment in a timely manner.
Yeah.
One of the things to probably add to that, Tina, is typically the price that Rory and his team will help facilitate secondary trades is at what we call net asset value, so the valuation of the property portfolio as well. And so we do that and help facilitate that process, which enables, whilst the process takes longer than it might be in a listed property sense, a share market sense, it enables that realisation of inherent value in the real estate and the interest in the fund as well. So that's been, ever since I've been involved in the business, typically those secondary trades have been at the valuation of the shares themselves.
Sure. And as we know, there are lots of different levers, I suppose, that you can pull, and understand that the last few years, the macro environment has perhaps not been on our side as much as we'd like. How does that typically affect that secondary market?
If you step back from the sort of bigger picture and where things are at the moment, and investor confidence will impact the flow of capital and the confidence around investing or just taking a pause. Late last year, things were really starting to improve and kick off, and the outlook was great, and we're cautiously optimistic about the year ahead. Lots of leasing and transactions, and we had a lot of investors wanting to continue to invest across the platform. As we moved into January, it was looking to continue on with that sort of momentum. And then, of course, the Middle East happened, and that certainly has taken a bit of gloss off confidence in the market. And so where we see reduced level of confidence or uncertainty, be it geopolitically or sort of an economic environment, investors are slightly more cautious. And so capital flows do moderate according to that sort of bigger picture. That being said, we are and have been always taking a long-term investment horizon in what we do. And so, our role is to invest through ups and downs of economic cycles, and really as part of your overall investment strategy as a client, as an investor, really we're a portion of that proposition. And so, invest in it, take the long-term view, and receive the benefits of passive investment in commercial real estate.
Sure. No, that makes sense. And we also talk about, terminology around diversification, diversification within our funds. Can you just talk to that a little bit, Rory? What does...
If you've only got one asset, maybe one or two tenants, if, the economy isn't going that well, your tenant runs into trouble, you might lose that tenant, you lose your income. As an investor, that's a pretty tough position to be in. So by being invested in a fund that owns multiple assets across different locations, different sectors, you're essentially just spreading your risk. You don't have all your eggs in one basket, so you're not overly reliant on any one tenant for your income. And so your investment performance should be a lot smoother over time as well.
I'll give you an example of that, of the benefit of that for that multiple building and sector approach. So COVID came along, and 2020, and the world shut down, New Zealand shut down as well. And so, one of our largest funds, Pacific Property Fund, which is looking to continue to grow now for strength and resilience. We moved into COVID with multiple tenants within that fund, and we're able to, with the strength of that portfolio, make good decisions to support our tenants through, which ultimately allowed us to ensure that our tenants got through that sort of period of COVID, whilst ensuring that we're able to sustain our returns to our investors. Now, one tenant within that whole portfolio ultimately didn't make it, but that didn't impact the returns that we're able to generate to our investors because we had multiple investments in properties and sectors across New Zealand.
We have investment size or parcels a minimum of $1,000, which is a very low entry point, very attractive. And it's a common belief that, for people to get into commercial property investments, that they should have millions put aside. Why is that accessibility so important, do you think?
I'll let Rory talk to the sort of specifics of the parcel size. Principally, right from day one, 34 years ago, syndication was all about providing everyday New Zealanders the opportunity to get access to the benefits of investing in commercial real estate without having to go and buy the entire building themselves. Really what we've done in the transition or the evolution to the model of funds, so multiple buildings within one investment fund, is just enabled even greater access. And so that threshold to get access has just been lowered to $1,000 to provide New Zealanders of all ages the opportunity to get involved as well.
Yeah, I think that's the important point, is that, this is open and available to everyone to invest as well. And so whether your goals are around, steady, consistent income, or whether you want to maybe compound as a younger investor and grow your wealth that way, having that lower entry point is really important to making it accessible. And yeah, we're really proud of that.
Yeah, sorry, can you just explain compound? What does that mean, and how do people get involved?
Yeah. So compound interest essentially allows for the distributions or the income that you receive from your tenants to be reinvested back into the fund, and so you effectively start to earn interest or on that interest as well. It's commonly, I think, been referred to the eighth wonder of the world. So over time, that can have a really, significant effect on growing your wealth and your portfolio. And so, for a lot of younger investors who are still working, they don't need that monthly income stream. Being able to have that option to reinvest or compound into the fund is really important.
Sure. And if there was one key takeaway that, our listeners are tuning in today, so if there was one key takeaway to investors, what would be your one takeout message?
Well, I'll give two because I'm cheating.
Sure.
First one is get advice. So come up with the plans, talk to people who a financial advisor to organise a strategy for you, what suits your personal circumstances. The second one is time in the market. So once you've got a plan, then act on it. Invest and allow time to be your friend when it comes to investing. And certainly commercial real estate is all about the long term.
Yep.
And so time in commercial real estate will look after you.
Fantastic. Thanks, Scott. And Rory, one or two?
Yeah, not too much to add than what we've already covered, but I think it's important that obviously, yes, you seek out your own advice first, and understanding how commercial real estate can work for a lot of people within a wider portfolio, and certainly not suggesting you put everything in a commercial real estate fund, but it can work quite nicely, whether it's goals around income or, as I said, that compounding effect over time. It's can work quite nicely for a lot of people.
Thanks for listening to Fundamentals by PMG. If you enjoyed today's conversation, be sure to like, subscribe, and share it with someone who might be looking to diversify their portfolio and grow their wealth through commercial property. To learn more about PMG's unlisted commercial property funds, visit pmgfunds.co.nz. The information discussed in this podcast is of a general nature and relevant at the date recorded. It does not take your financial situation into account. Like any investment, commercial property carries risks, and past performance is not a guarantee of future results. Please seek independent advice from a licensed financial provider before making any investment decisions.